Hi everyone, welcome back to Be Rich. Yes, the market is closed today, so I thought I'll take this opportunity to give you an interesting line of thought. This line of thought is going to link Satyam Computers, Kingfisher, and Tata Motors, and George Soros, and how it's all relevant to investing and value investing. That's the point of this video. So by the end of this, hopefully you'll understand why I touched upon these companies and what is the connect to this to value investing. To start off with, I want to talk about someone known as Marilyn Vos Savant. Marilyn Vos Savant was known for having registered an IQ of over 200, and she's the only woman, I think even human being, to have recorded such a high IQ, higher than even Einstein. And she very famously put forth this problem in probability, which everyone first pulled her down for, saying it's terrible, it's not true. Then all of the famous mathematicians had to walk back and finally agree that what she said is true. It is known as a Monty Hall problem. The Monty Hall problem is simple as this. There are three doors in front of you. Behind one door, as Arun would like to know, there is a BMW car waiting for you to win. So what happens is Arun is first asked to choose a door. So he chooses door number 1. Then I open door number 3 and show him there is no car. So only door number 1 and door number 2 is left. Then I ask Arun again, do you want to change your door? Logic dictates Arun would probably say, no, sir, I will not change my door. I'll stay with door 1. But if he wants to improve his probability of winning, he should switch definitely his door to door number 2. And it goes counterintuitive. And logic, it says, why? Where is this? Because we think that as soon as one door is removed, the probability of winning becomes half. But it's not true. The way it works is, in the beginning of the problem, each one had a probability of 1/3. When I removed one of it, then the probability becomes 2/3. Yes, it sounds counterintuitive, but it's true. It's been proven repeatedly. There's lots of videos about this. You can see it in YouTube and Google it. So what has this got to do with investing, Vinod? What has this got to do with value investing? The two, Satyam, Kingfisher, and George Soros. Well, what you learn from this is, 1, you always have to reevaluate your decisions as an investor. And 2, you have to be flexible. And 3 is you have to be counterintuitive. When I'm talking about reevaluating decisions, Satyam Computers and their stock famously comes into my mind. When the initial scam broke out, a lot of investors held on to the stock thinking it'll blow over, and they did not really dive and see what the extent of the scam was. And then finally, a lot of investors lost a lot of money. Then the Tech Mahindra takeover happened, which is another story altogether. Another example is the Kingfisher. The Kingfisher Airlines, the way it collapsed, we all know. But a lot of investors held on to it because they did not really look into the information which was being given to them. And they assumed, because it's Vijay Mallya and the history of his family and holding on to UB, they thought, no, somehow he'll come out of it. And again, investors lost money. So that is why it is important to be always reevaluating every single decision you make based on the information that is available to you and coming to you. Okay, those two are two negative stories. What about positive stories? A positive story will be the pharma sector growth from 2010. 2010, Indian pharma sector started making generic drugs, and there was a demand for these generic drugs globally. And we know the story of Sun Pharma and all these other pharma companies in India. From 2010, they've been growing steadily. If you have been keeping an eye on this kind of news and seeing what is happening, and you were able to titrate this kind of information and understand it, you would have made a lot of money, because you would have seen how the demand for generic pharma is there growing globally, and how Indian companies, pharma companies, are making this and exporting it. And we have seen the potential of this, and you would have looked at the value in 10, 15 years, and you would have been steadily investing in the pharma sector. Another great example would be the banking reforms in the 1990s, ends of 1990s, when the Indian economy went through banking reforms and structural reforms in financial sector. Banks like HDFC and ICICI were primed at the time to take advantage of this. So if you were an investor and you were able to evaluate this information and see it, and not just take blind decisions, you would have made handsome reward. This is what I wanted to tell you about as far as reevaluating your decisions concerned. The other thing is about being flexibility. Is a great example would be Tata Motors. If you look at Tata Motors' history, they first started off making trucks, then they got into passenger vehicles, then now the company is getting into electric vehicles. In the process, they have become a global company, buying Jaguar, Land Rover. So as an investor, you always have to be not only reevaluating information, but also be flexible in your investment. Whenever you see opportunities, you have to be ready to dip into the market. And when it gets too expensive, you have to be willing to wait. That flexibility you must always have. Your decision making is very important and part and parcel of this. So finally, we come to counterintuitive. Like I said, you had 3 doors. One door was shown to be empty. Then you think the probability is going to be 50%. So why change my decision? But I say you should change the decision. And that is counterintuitive to your logical thinking. A great example of this is George Soros. In 1992, when the British pound was struggling, everyone said the pound will not be devalued. And George Soros stepped in and he betted against counterintuitive thinking and he betted against the pound. And then he famously won the Black Tuesday and he made over $1 billion. We all know it. It's history. Anand's spoken a lot about it. But at that moment when he was doing it, it was counterintuitive. Everybody told him that he's crazy, that he's going to lose a lot of money, and people were laughing and snickering at him. But he knew that based on his knowledge, based on what he understood, and where things stood, that the British government cannot hold the position it was holding as far as their currency was concerned, and they will have to relent. And finally, he was proven right. Now, in retrospect, in hindsight, we all look back and think, what a great investor, what a great mind. But in that moment, it was sounding and looking crazy. So this is very important when you're investing in markets like this. Like we saw yesterday, when the market suddenly bounced, when we opened the gate, everything went green, and it went green for a long time. Till almost till 2:30 in the afternoon, things were going up, and it looked like we missed something. Especially value investors, retail investors like you and me, who invest little money every day, would have felt a lot of FOMO, thinking we have missed out on some golden opportunity to make a quick 2-3%. People like my friend Arun behind the camera would have been very upset, thinking, sir, we should have definitely bought some IndusInd Bank or something, because see, everything is up 2-3%. But lo and behold, the FIIs were waiting right at the gate till 2:30, and then they unleashed themselves. You can see the data, which I'm sure Rupesh will put up, where you can see the FIIs finally sold 3,000 crores. And the DI is only buying around 2,000 crores. And there's a net loss of around 1,000 crores. The negative, which really pulled down the market back to literally where it opened or almost below where it opened. So that is also counterintuitive, because we have all kinds of pundits coming on the media nowadays saying all kinds of information. We had one famous one where it was said that the FIIs come back to India, we'll see Nifty going 30,000. May happen, but that is what everyone is saying. But we know as value investors, there is no change in fundamental information which we have been given so far. There's no change in earnings. There's no change in government policies. There's no change in any macroeconomic things. Like there's no global peace suddenly declared and things are not hunky-dory again. China and the US have not become thick friends again. So taking everything into consideration, you have to hold your positions and believe, even if you see the market going wild, that your fundamental core beliefs are still sound, because there's no new information to evaluate. And though it might be counterintuitive, a lot of your friends may be saying you should be selling or you should be buying. You should be firm in whatever you have understood, like how George Soros was. So I thought this is an interesting example. How even Marilyn was savant was hammered initially when she came out with her article about the Monty Hall problem. A lot of mathematicians, tried to shame her and say that she knows nothing about it. She should keep sticking to her articles and not put herself into this kind of a realm that she's not a mathematician. Then all of them had to eat humble pie once they actually spent some time in evaluating her reasoning, and had to come back to her and apologize and retract their statements and say, yes, she was right. So this is what I wanted to say. Value investing is very counterintuitive. Value investing is very much away from the norms. And that is the main reason why I keep telling all of you, when you enter the market for the day, whatever stocks you buy for the day, log out and move on. There are other things in your life to do, and market and stocks aren't the only thing you should be focusing your life on. And if that is the life you're leading, it's a very dull life, I would say. There's more to life than money, there's more to life than wealth, and there's definitely more to life than Indian stocks. So spend a portion of your time, do spend, no doubt about it, researching, investing, but then move on to other things in your life and do go live your life out there. I hope you found this video informative and entertaining. As always, do put in your comments down below. I would love to read them and hear them. And I'll see you again tomorrow once the market opens, maybe with some good news or not so good news. As always, take care. Thank you.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for the Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.